What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, guys, AMC is down just a little bit, about 10% today. We are still up from Friday's close. It's very important that we kind of predicted this was going to happen today. The hedge funds had saved all of their ammunition for today because Jerome Powell was speaking. And if you remember, if you've been investing in the market, whenever the Fed meets or Jerome Powell speaks, investors really get nervous and they hang on to every single word that he says as if it's going to completely derail all of their investment strategies. A little bit of good news, guys. Interest rates are staying near zero. The Fed is going to continue to buy 120 billion of treasury securities every single month. Inflation has inflated. However, it is going to be very temporary. So keep that in mind going forward. They do talk about raising interest rates twice in 2023 now, but like I said, guys, we're barely halfway through 2021. We're not even halfway through 2021 yet. Okay, and then we still is a year and a half away. But keep that in the back of your mind because chances are the market will correct once interest rates going forward. But let's talk about AMC. I want to take a look at this 5-day, 5-minute chart here. We really got rejected around that $60 level, a very psychological level to us as investors. Okay, but also very important when it comes to the options chain. Now, I was taking a look at the options chain, guys, as I cover it very often on my channel. You can see a massive amount of call volume, over put volume is happening. There still is a higher put open interest, and I believe a lot of those positions are far out of the money as they were placed a long time ago. But you're seeing the interest continue as the weeks go on. We talked about the importance of January 18th. We have 1.6 million contracts in open interest. And I believe it was just yesterday, there was 125,000. So that's more than doubled. Very good news for AMC going forward. Another thing I want to highlight, and people were talking about it on the internet yesterday, but I'm really going to break down the importance of what this means. Okay, so this is all about the DTCC 2021-005. Now, this is on their important notices page, and it talks about the submission of the rule filing to modify the settlement service guide and the form. You can go over here and read what it is all about, and this is just a brief PDF that explains that it has been submitted for rule filing. There was a couple emails that came about that said that one of the head of the DTCC had replied saying that it was going to go into effect yesterday. If you look on their website and you go over to rule filings, it hasn't been updated yet. However, when this does go into effect, I believe it will be effective immediately. So guys, just to give you a brief rundown on what this means, and then I'm going to jump into looking at the volume and why I think this is so much bigger than some of us can even imagine. Basically, this ruling means you need to source a share before you short it. You can't just go on merit any longer, that there's always going to be shares available to short. You have to source a share first. Well, why is this important? One, that breaks into the whole theory that we have, okay, and the well-known fact that we have that there are a lot of synthetic shares out there. This is going to limit their ability to short the shares. Now, a lot of people also do talk about, well, that's only if they put it into effect. Well, I don't think that they'd be making a rule change, especially with everything that is going on currently and how much awareness and attention that has been brought to naked shorts, that they would really make this rule change if they're not even going to at least threaten to enforce it. That being said, so I'm very anxious to see this one get approved. Also, we do have 002 being ruled upon on the 21st, if approved, that piggybacks off of 801. And it's really just going to be an absolute trifecta of rule changes going forward. Now, it doesn't mean hedge funds aren't going to try to finagle something else, because as we know, this is like, backing a beast into the corner. They're going to go down with the biggest fight that they can possibly have. So this isn't by no means an end game, but I swear this is a huge chop off the block, and it really limits them. And it's just going to get to a point, guys, where they've got no moves left but to cover. Next thing I do want to point out, guys, is I was going over the options volume as it's decreased a little bit, but we're still high, up almost around 300 million as of Monday. But look at this, guys, 753 million shares traded. So it got me kind of thinking to myself, wait a minute, if us apes own 80% at minimum of the float, which is probably more about 85 to 90% of the float. I'm going to use 80% to be conservative. That's over 400 million shares that we own. And if all we are doing is buying and holding, and we're not selling, we're only buying and holding, we are adding to some of this volume. However, we're not selling. So if you can think to yourself, there's a piece of it that is held up by institutions, and then let's just say there's just a very small float that is available because the float is just over 500 million. There's only a very small float available. How could you trade? How could the day traders move this many shares in such a short period of time if there wasn't a ton of synthetic shares out there to be traded? It's just not really possible. If you look at other stocks that are heavily traded, such as Tesla, such as Apple, I mean, even look at NEO, their volume comes nowhere near the float. If you do look at some low float stocks that the day traders jump on, like BCTX, you look at Torchlight, which is going on, I mean, ORPH, I think there's a couple other ones, they do trade over the float. However, none of that float is being held, and they're only trading at, per se, maybe 1.5, 2 times the actual float. When you think about this, if let's say at most there's 50 million quote unquote shares available to be traded, that's 15 times the float that they traded back and forth. 15 times that they had to move back and forth. There's absolutely no possibility that that can actually happen because there's just not that many opportunities in the day for them to be able to make that amount of swings. So that's why this ruling, if it goes into effect, is going to make AMC and GameStop and every other stock that is heavily shorted naturally price get a little bit inflated because they're not going to be able to source shares before they just are approved on merit to be able to short. Okay, so I was thinking about that. I really wanted to bring that out to you guys. Last thing, guys, just take a look at where we have come still. If you jump out to this 180-day 4-hour chart, which I love looking at, we broke out from this bull flag, this bull pennant that we were in. We were looking to find that consolidation around that $60 mark. We got banged down, today. We still got Thursday and Friday to come back strong. Still bullish as ever, guys. And that's it for this video, guys. I'll see you in the next one.